Hello investors and welcome to the channel. Here I talk about long-term investing in companies that pay a dividend. This is known as dividend growth investing. My name is Michael and today we're going to talk about how the market ended for the week and then take a look at stock futures. Just taking a quick look at the major indices for the week. For the S&P 500 index, it is down 2.86%. For the Nasdaq index, it is down 1.90%. And lastly, for the Dow Jones Index, it is down 3.31%. The markets are down this week mainly due to the number of cases increasing as a result of the pandemic. Let's take a look at how certain sectors of the market is faring due to the rise of cases resulting from the pandemic. With the rising numbers of confirmed cases caused by the pandemic, major companies like Starbucks, Apple, and Microsoft are considering to reclose their stores once again. These mentioned companies are seen as one of the leaders of the US economy. Therefore, if the leading companies within the US are closing down stores, then this is a huge red flag for other companies to follow suit. Before we take a look into the markets, let's take a look at the major driving factor affecting the overall stock market. The amount of confirmed cases caused by the pandemic initiated a market sell-off this past week. This website right here is organized by Johns Hopkins University, a well-respected and established institution of education. As of this recording, the university has counted over 10 million total confirmed cases in the world, counted over 500,000 confirmed deaths, and shown that the numbers are only continuing to increase exponentially rather than flatten out as seen in the confirmed and logarithmic graphs. As we can see here, the confirmed cases of the number of infected is going upward. In addition, the logarithmic graph is also trending upward as well and does not appear to be flattening out as we would hope. So, given the current state of affairs, it appears that this pandemic will continue to affect the entire world until a vaccine is manufactured, distributed, and herd immunity kicks in order to protect the overall population. This pandemic has caused a lot of companies to file for bankruptcies. As a result of these bankruptcies, companies such as GNC, Hertz, JCPenney, and J.Crew have found ways to try and revitalize themselves in order to survive. In many of these places, if you still have a gift card or some sort of balance with these companies, you should most likely use them right away in order to retain the value of those cards. Earlier, there were a lot of people buying shares of some of these companies in order to make enough money through trades. For example, there were a lot of people buying Hertz stock because the company filed for bankruptcy and it began to issue a lot of shares in order to raise money to pay down these debts. In order to pay down the debt, Hertz has tried to salvage itself by issuing more shares for investors to purchase in order for the company to use that money and get out of debt. Essentially, Hertz was trying to crowdfund its way out of bankruptcy by issuing these new shares. However, the SEC has stepped in order to stop the stock share of Hertz. In a recent article right here, Hertz has abandoned its controversial $500 million stock sale and has instead opted to seek a bankruptcy loan. Essentially what happened was that the SEC took notice and reviewed the sale of the shares that Hertz was selling. Hertz was trying to find a fresh way of fundraising for its business in order to reconstruct itself and get out of bankruptcy. In order to do this, Hertz thought that it would be a great idea to sell shares of its company to fund for its bankruptcy. However, this was frowned upon by the SEC, and as a result, the SEC sent out a cease and desist action in order to stop Hertz from selling all of these stocks. As a result, Hertz had to abandon its stock sale and has now applied for a bankruptcy loan. Now, as a long-term investor, I can't really see the appeal into purchasing Hertz stock. If we take a look at the pricing of Hertz stock over here, at the beginning of the year, it was trading at around $16, and then the pandemic hit, and the shares of each stock went down to about $3, and right now it's about half of that. It's trading at about $1.50, $1.49. Now, as a trader, I suppose that one could be trying to buy this type of stock and hoping that you would try to 5x or 10x your investment, but I don't see that happening anytime soon, especially with the current climate of our economy. Right now, a lot of places are closing down travel in order to contain the pandemic. So, if the pandemic is causing people to have the inability to travel as much, then companies such as Hertz, which are invested in these types of traveling economies, they're going to be the ones that are hurting the most. Therefore, it would make sense that stocks such as Hertz, which are in the traveling industry, should be avoided until the pandemic is no longer an issue. Instead of investing in companies that are so susceptible to the pandemic, it makes more sense to invest in companies that have a robust economic moat. Companies which have a robust economic moat are pretty easy to find. If we take a look at this pie right here that I've created in order to use as a certain benchmark, we can go into it and take a look that there are a lot of companies that have really strong economic moats that continue to pay out a dividend despite of market conditions. Just taking a look here, in fact, in the past quarter, these stocks have actually done pretty well. In fact, their stock price is going up and they continue to pay out dividends. In fact, a lot of these companies have raised their dividends despite the hardship of the pandemic hurting a lot of their sales. Now, let's take a look to see how my portfolio compares. Here's my portfolio right here. Looking at the past year, my portfolio is down $1,075, which is a loss of about 16.08%. For the past quarter, my portfolio is up $1,330, which is a return of about 17.92%. For the past month, my portfolio is up $65, which is a return of about 0.75. For the past week, my portfolio is down $190, which is a loss of about 2.16%. And for the past trading day, my portfolio is up about $200, which is a return of about 2.33%. So, not too bad, pretty much in line with the market. Taking a look at this portfolio over here, it had one trading day, which it bought some shares of NWN with the leftover money that was provided to me by my dividends. Speaking of dividends, if we take a look over here, we can see all the dividends that were paid out to by this portfolio. For example, I earned 20 cents from Commerce Band shares, 30 cents from Dominion Energy, $1.77 from Royal Dutch Shell, 58 cents from VF Corp, another 27 cents from Commerce Band shares, 17 cents from Anthem, 34 cents from Qualcomm, 4 cents from Bank of America, 7 cents from Gaming and Leisure Properties, another 28 cents from Gaming and Leisure Properties, $1.57 from Kraft Heinz, 15 cents from Lockheed Martin, 2 cents from Nvidia, 55 cents from Principal Financial Group, 12 cents from Gaming and Leisure Properties, and another 48 cents from Gaming and Leisure Properties. These dividends that I earned are a result of me owning shares of each company. This is money that I did not have to put any effort into earning besides clicking a few buttons to buy shares. Essentially, I'm earning money while I sleep. This is referred to as passive income. Earnings which are derived from an enterprise like a rental property or a company which require little to no effort to earn and maintain. Although these amounts may seem small, every little bit helps and will eventually snowball into something bigger through compounded interest. This concludes the update portion of my portfolio. Thank you so much for watching this video until the end. If you liked the video, then please give it a thumbs up as it will help the channel grow immensely. If you have any comments or questions, then leave them down below in the video and I'll do my best to personally address it either in the comments or answer it in future videos. I greatly appreciate everyone watching my videos and I hope to speak to you all again very soon.